evening, everyone. You're welcome to our weekly market analysis session. We're going to be having analysis for weeks 27 of 2025. The month of June is almost over. Today is the 29th of June 2025. Basically, the last week of June. We have one more trading day in the month of June before we roll over to July. That will be on Monday, and week 27 is a non-farm payroll week because that's the first week of the month of July. So on Friday of this new week, we're going to be having non-farm payroll, and we know our protocol. We usually don't trade from Thursday of non-farm payroll week to Friday because the price action may not be very symmetrical the way we want it to be because there'll be a lot of in play. The market is going to do things that are not really very much okay or in line with our strategy or our model or our trading. So I advise new traders to avoid Thursdays and Fridays of non-farm payroll week, the first trading week of a new month. You can trade Monday, Tuesday, and then Wednesday up to New York Open. After that, just let the market be, and then come in next week to trade when the noise is over and the market is quiet a bit. All right, so that being said, this is the dollar index. I'm using MT4 platform for this analysis. So the dollar index of weekly time frame, we have the movement down. It was bearish. Now, by the way, I told us last week when we had our analysis that I was hoping to have a bullish movement and let's let it trade to clear the buy side liquidity resting on 4 hours time frame. We didn't get that, we didn't get that. We rolled over and started selling. So right now we have traded into the volume imbalance. We can see, let me take it close. You can see the volume imbalance here inside bullish order block. So price traded into the volume imbalance. Not quite filled it completely, but that's where we are at the moment. Traded into the volume imbalance. Now, based on what we remember, I told us that long term we are bearish on the dollar, and that this movement up here was just traded into the inefficiency and then the breakout block here. And after that, we saw a trade to the downside, clearing this low. And then I wanted to see just bump, take out this high here. If you go to 4 hours time frame, it's going to be much more clearer there. I wanted to see that happen and then a sell-off. That was what I was expecting. And if it had given me that, it would have been a good trading opportunity for Euro USD and GBP USD for a buy. But it didn't give me that. It didn't give me that. Okay, so it is what it is. We're going to take the market the way we say it, because you can't force your will into the market. You can only accept what the market is offering you and then trade in line with what you have. So at the moment we are bearish and closed below. You can see how the body is closed below. So we want to see another bearish movement to the downside. On the daily time frame, we had spotty price actions, jumps, gaps here, and this is actually the futures contract of the dollar index. This is not the cash price, this is the futures price, the September contract. That's what we're having here. But if you go to use trading view, you're going to be having the cash price, and for the cash price you don't have all these gaps. Okay, these gaps you're seeing, you don't have all these gaps. Nonetheless, we're going to use what we have here for the analysis for tonight. All right, so we traded into the volume imbalance on daily time frame. We've created relatively equal lows on daily time frame. You can see that. Want to see a sweep. Now if it runs up, retests this old low, and that could be another move lower to clear the sell side liquidity. Okay, these were the equal highs I wanted you to trade to. This week I just finished. Last week I wanted to see movement of price to the upside, clearing this buy side liquidity. We didn't see that. But on the cash price, we saw a little movement, just a little peak above this high. If you check trading view, GXY trading view, you see that it traded above this high just a little before it sold off. But for the futures price, we didn't see that happening. Okay, so what do we expect going forward? We expect bearish movement. Okay, the bearishness may not be that much because if you go to monthly time frame, this is the bullish order block, and price has traded into the bullish order block inside old high here, breaker block here. We have the low, the high, we have a lower low, it broke to the upside. So we are essentially inside the breaker block. So I want to see if we trade below this low here, this particular candle. That's what month is that? That's January, no, February 2022. So that's if we take the low, we trade and close below the low of this, then that would be extremely bearish for the dollar, going to sweep sell liquidity resting below these lows. I don't see that happening. I feel that we're going to have some form of consolidation here and then a bounce of a trade up, like a buy going higher. That's what I'm looking at. That's what I feel might happen. Okay, that's what I feel might happen. For now, we're going to observe how price trades around this area here, this bullish order block. I'm going to see how price trades around this bullish order block here on weekly time frame. You can see balance price range here. So if it breaks below this balance price range, then we're going to be heavily bearish, heavily bearish for the dollar. So this area where we are right now is a very significant point for the dollar. If the bulls are going to step in, then they should step in around this area, okay, to start experiencing higher prices for the dollar. We have a lot of imbalances that need to be filled because it was really trading so aggressively to the downside. It didn't trade efficiently. It was, kept having big ranges, large range candles, to the downside, and this is where we are. So I feel that we're going to have some form of turning point here, but in the interim, I'm electing to see it go lower, take out these relatively equal lows we are seeing on daily time frame, at least filling this volume imbalance completely before we make an attempt to want to reverse. Okay, that's what I want to see. So when it takes out this week's low, I am still bearish, and then we'll see what happens here. Now, right away, I'm going to say that the market is not symmetrical because if dollar is going to be bearish, we expect that gold should be bullish. But if you look at the gold markets, you can see that last week also was bearish for gold, and this is not how it should be. If gold is bearish, dollar should be bullish. Dollar is bullish, gold should be bearish. Dollar is bearish, gold should be bullish. They are inversely correlated assets. But you can see what happened. Last week we were bearish on dollar, and then gold we were also bearish on gold, and it's not symmetrical. So I'm gonna be a little careful in trading, all right, because the market is not symmetrical at the moment. I was expecting, I will get to gold later on, but back to the dollar. So based on that, I feel if gold wants to go lower, okay, if gold wants to go lower, it means that dollar might want to, create an intermediate term low here and start to rally based on the fact that it has traded to an area where we want to see it react. If you measure the low of the swing here to the high of the swing here, we're essentially inside discounts. We are inside, this is the equilibrium level, so we are below equilibrium, we are in the discount level. Okay, so we want to see a reaction from here and then see dollar start to rally. That will give us a confirmation that yes, the gold market wants to really sell, or otherwise it's not really something we should want to invest a lot of time in until we see a clearer direction of the market. Right now, it's not really good. Okay, I think I've taken much time on this. So daily time frame, we expect these lows to be taken out, and then we want to see a reaction to the upside. But if it breaks below that and then closes with its body to the downside, then we'll still go lower. All right, that being said, let's go to fiber. Now, fiber weekly time frame, you can see how price traded up aggressively. Now, if you measure the high of this swing range to the low of the range, we can see that here is deep premium. The only area we're saying that could have some form of resistance is this sell side imbalance, buy side inefficiency CB here that I've outlined here. So that's our upside objective. Okay, that will also give room for dollar to go down, take out the equal lows on daily time frame. So we want to see it bump higher, trade into this area of inefficiency. So we want to see a higher movement, and then how we trace around this CB will determine if we're going to go higher or go low. But I feel that where it is at the moment, it should start to sell. Okay, if you trace into this CB, we should meet some form of resistance to go lower. Here we can see balance price range efficiently traded through. They are up, down. Okay, and this is also deep premium. So we want to see it respect, trade into this FVG, and then reject. We don't want to see body closing above it. We want to see it reject. We have very short block here. You know, form of like a mitigation block as well. So we should see some form of reaction there, and then an upside a downside objective after it trades into that level. So that would be like some form of creating the high of the year. Okay, this is June going into July. So if first week of July gives us that high, we want to see a sell-off throughout the rest of the year, that kind of a thing. But if it goes above this, then men we're going to be heavily bullish to sweep out price liquidity resting above this high. Okay, that's for that. Daily time frame, we saw how we just kept going higher and higher and higher and higher. This FBG here held price. Let me increase it here. This FBG here held price. We traded into it, and then we started to rally. This is where we are at the moment. So we want to see trade into here, and then how we trade into here determine our next line of action, if we will go higher or start to reverse for a sell. All right, next one is GBP USD. Same thing here. This line I dropped here, this line is the main threshold of the the opening price, rather, I beg your pardon, is the opening price of the bearish order block. This last up close candle before this down move, that's our bearish order block on monthly time frame. So I placed this red line here, signifying the opening price of the bearish order block. Now there is no area of inefficiency on the monthly time frame. If it's going to go higher, then we have buy side liquidity resting above here. On weekly time frame, we've taken out this high here. This is the balance price range as well. I think we should start to see reaction from here, reversal patterns occurring here for a sell. Otherwise, the next point of course is to run out these equal highs. That's what I'm saying here. So if dollar trades down, takes out the sell side liquidity resting below those equal lows on daily time frame, and then reject sharply and starts to buy, this will react or consolidate here and also start to sell. Okay, that's basically what it is. Nothing again. We were bullish all through the week. From Monday we started going bullishly till Friday when we had a little retracement. Okay, so we could see consolidation here and then a decline. That's what I'm actually expecting, because we are really looking at it here. No, it's like trendline phantom, respected here. So I want to see it kind of trade lower. Okay, take out sell side liquidity, because would have been buying this market. They've traded their stop loss to here, to here, to here, and every time they trade their stop loss, market never came back to clear those stop losses. So I feel that this area we should start to experience or witness a decline in price. Okay, so if dollar takes out that low on daily time frame and starts to rally, that would be the justification for this to sell, to decline. So that's about that. Let's go to Aussie. Okay, so for Aussie, on monthly time frame, we have the order block here, bearish order block. Mean threshold is this line I just put here, but I don't think that it's going to get up to that point. I don't think it's going to get up to that point. We have small FVG here that is reacting off of. So I want to see it maintain the FVG level and then decline as dollar starts to rally. Okay, weekly time frame, you can see how it's just trading around that FVG on monthly time frame. Okay, inside this the opening price of the monthly time frame bearish order block. So that's kind of where the market is just you know consolidating there. I want to see it start to give way for sell side. We pumped some sell side liquidity last week, took out this low, but we didn't trade. I wanted to see trade lower into this FVG and then capitalize on this other block before it goes higher, but I didn't do that. So let's see how it goes. What um, let's see what so we had movement to the upside on this pair because foreign currencies were typically bullish throughout last week because dollar was extremely bearish. We have equal lows here, we have the FVG here, we have the bullish order block here, a lot of downside objectives. So I want to see if this could be the cap of the high, like the swing high to sell. Let's see what dollar does. I think what dollar does is going to set tone for either movement higher or lower for foreign currencies generally. Same thing, we have the monthly FVG on this pair as well. You can see how it's been respecting the 50% of the FVG. The bodies are respecting that. Price has been consolidating there on weekly time frame. You can see how multiple times it's been, rather you can see the close of the candle also last week also respecting the lower end of the FVG. So I think that we could just consolidate here much more longer term before we start to sell. But once dollar starts to buy, that will give room for this to decline. That's pretty much it. We had movement to the upside, still inside this range, nothing significant as well. Day traders model of scalping is actually what we'll be witnessing throughout until we see an expansion to the upside on the dollar before this thing starts to go the way we want them to go. Okay, USD card. Now for this, I was expecting that we're going to go higher, but of course, since dollar went bearishly, this also had to give way, and then it also went bearish on daily time frame. This was where this was where we opened, we gapped higher, traded up, and then came back and consolidated. And on Thursday we made run lower into this FVG, and then we since repriced higher. Now if dollar is going to go lower, I think this might want to retest this line here is the bullish order block on weekly time frame. That's the bullish order block opening price. So might retest that level again, consolidate here because dollar has actually gotten to the point where we want to see a movement to the upside. So if dollar resumes its bullish movement, this will consolidate and then start to go higher because we have buy side liquidity resting above this, above here we have imbalance here, we have all these. So a lot of buy side objective, and then for longer term perspective, this high and this high, they're relatively equal. The sweep was really very small, so that's why I feel that we might want to go higher this pair. So it will consolidate here and then give room for once dollar starts to move higher, this wants to go higher. to the upside. All right, so that's for that. USD CHF. Now for USD CHF, if you go to monthly time frame, I was of the opinion that we will not see lower prices, and that was on the premise that I was looking at the the price on trading view, and with that we saw that we had this long week. But for this platform, we're not seeing such for this platform. So I had to quickly anchor, look at the rejection block here and then extend it out. So any downside objective, we want to see how it trades around this rejection block. That's on monthly time frame. So weekly time frame, we have this range here. So if it's going to, since that's closed below these equal lows with momentum, the low of this candle is uh, 0.8039, so around 0.8040. 20 pips above, below that, 30 pips below that would be um, 180 big figure, that kind of a thing. And so if we're looking at big figure level, the low of this candle is at 79.57 and 7 pips. So we swept, traded below the big figure and then ran for 40 pips below that. I think that's where we had that level there. So if dollar is still going to decline, then I think this has potential to go to the the rejection block on monthly time frame. That's the lowest point of call I feel it might get to. But once that dollar starts to rally, this will also give way and start to go. Remember, we have this huge pool of liquidity resting here. Huge pool of liquidity. And what is resting here above here? Buy stops. And we have an imbalance here above the pool of liquidity. So let's see how we trade around this, between this level to the rejection block on monthly time frame. USD JPY, we have relatively equal lows here. This thing would have actually gone lower to sweep it, but it's been holding this for a very long time now. I really don't know what this thing is going to do. I really don't know it. The volume imbalance here, we've traded up around inside it multiple times, and body's respecting the volume imbalance. So we want to see a decline, clearing the sell side liquidity. That will give us room, it give me room to trust the next line of call, because if it sweeps this sell side liquidity, the next point of call is this imbalance here, where my cursor is. That will be the next point of call before, and that will be also deep discount. But if you take the range from this low to the high here, essentially that is a deep discount. So one will say sweep below these lows and then trade to this area of inefficiency before anything, like I can consider trading this. But otherwise, I'm not going to touch the USD JPY. But if dollar starts to rally up, this might also want to go higher. So let's see how it goes. Daily time frame, we had the movement, we had a gap up on Monday last week, and then since we're bearish, still within that range. This is efficiently traded through, so it definitely is going to spend a lot of time before it breaks below these lows. Okay, so that's for that. Let's go to indices. We finally made a pop run high above the equal highs. I don't think that's the end for this. Is he going to go higher one more time? I think that's going to be, and the reason is because US 30 has not taken as its own buy side liquidity. So based on that, I feel that we're still going to run higher on US 500 and US 100. One more time, going higher. Creating higher high for this. Okay, because the indices, we have a divergence between US 30, US 500, and US 100. US 500 and US 100 have taken out their buy side liquidity, but US 30 has not gotten there yet. So it's kind of a six star approach, where saying these ones have already gone higher. I want to see this also, do same. So if this is going to go higher, it's going to give room for US 30, US 100, and US 500 to run higher one more time. That's why I feel that we're going to create another higher high for these indices. Like we said weeks and months ago that I wanted this high to be pushed. We finally seen it come to fruition. Uh, Finally is the gold market. Now, I was of the opinion that we will run lower, and I actually felt that we had buy side liquidity resting above this equal height. So when I did my analysis last week, I told us that I want to see a run higher into this level. We have FVG resting here, we have the equal highs here. I want to see price trade above this, and if it had happened that way, that would have been a very good sell for me. Because it didn't do that, I really didn't participate in this thing. I didn't really trade this because I was hoping that it's going to trade higher into this FVG, creating sweeping all the buy side liquidity resting here. And we could see how price was just reluctantly going, it was really not, it didn't want to go down. You can see how it was just unreluctant to go lower. Okay, kept struggling. So I felt this is just a retrace into the other block to recapitalize on this other block and then move higher, sweep buy side liquidity and then sell off. So I was hoping that we'll see that run up, that push up Monday into Tuesday, clearing sell side liquidity, buy side liquidity rather, before it sell. But we didn't see that happening. We saw it open here, it gapped up and then rebalanced and then we traded up back to the opening price and then we sold off from there. From Tuesday, is it? From Monday, we started selling off, and consolidated throughout. And then Friday, we pushed lower again one more time, clearing the sales and liquidity to the level I actually outlined. I actually wanted it to trade up to that level here and then sell off, trying to attack these lows. It when came close to the low inside this FVG here, but it didn't give us the opportunity for the move that we expected, like a swing trading opportunity. We didn't get that. Now it was bearish. At the same time, dollar was also bearish. So you can see that there was no symmetry. If dollar was to go bearish, gold would have got bullish. Now, because we expected gold to be bearish, dollar, I actually analyzed that we want to see a movement higher on the dollar, but we didn't see that happening. We just rolled off, started selling. And that's the market for you. So we want to take it the way we see. Now, from what we are seeing here, I feel it's going to run this low, recapitalize back on this other block here. So let me extend this out one more time. Let's see how it trades around it. All right. So I feel it's going to take out Friday's low, retest this other block again. Let me see if on 4 hours time frame we have anything. Yes. Okay, so that's it. We want to see it trade around this area, filling this FVG complete. Take out this low. So if it does that, and then dollar starts to rally, perhaps it's going to trade back up to this area as support resistance broken stone, support broken tone resistance to go lower to sweep these lows. Okay, until we have the symmetrical movements between dollar and gold, I'm not going to be touching gold. We want to see dollar going lower, gold going higher, or dollar going higher, gold going lower. If we don't see that, I'm not going to touch. I'm not going to touch gold. And for those of you that trade gold, I will also advise that you stay off gold market for now until we have a normal symmetrical movement where, because they are normally inversely correlated. If gold is going to go up, dollar should go down. Dollar is going to go up, gold is going to go down. So if we don't have that inverse correlation, please, I will advise stay off gold market for now until there's a proper symmetry. So that's my analysis for week 27. I hope we see what we are looking for in the marketplace. I wish you all the best, and I'm going to see you guys next weekend.